Hello, it is Tuesday, June the 24th. My name is David Walterman. I am a mortgage loan originator, a fancy title for someone who helps people buy homes. I help in the home loan process. It's another great day in the market. 10-year treasuries are down 4 basis points right now. 30-year bonds are up 18 basis points. Banks are going to be repricing mortgage interest rates for the better today. So interest rates are coming down. Yesterday, we saw an 8% decline in oil prices. Today, we're seeing another 5% decline in oil prices. I'm excited about that because I think of oil as energy, and energy costs have a lot to do with inflation. Inflation has a lot to do with mortgage interest rates. Higher inflation pushes rates higher, lower inflation lowers interest rates. So overall, it's a positive day today. I want to talk to you about the home loan process in general. If you're a first-time home buyer, I would guess that you have preconceived ideas about what the home loan process is going to be like. You might even describe it with words like complicated, scary, mysterious, the secrecy involved, what's happening behind the closed doors. So I want to boil it all down. Whether you're getting an FHA loan, a conventional loan, a VA loan, a USDA loan, it doesn't matter. The one thing it boils down to is your ability to repay. ATR, ability to repay. That's the one thing that the bank wants to determine before they hand you $500,000, $600,000, whatever the case may be. It's my job as a mortgage loan originator to help you through the pre-approval process before you get too far down the road, before you start shopping and falling in love with homes and wanting to put an offer in on a home. You should go through the pre-approval process. I help you determine whether you have the ability to repay the bank. Through the pre-approval process, we'll have certainty that when you do get ready to purchase a home, you do find that home and you place an offer, that we're going to get all the way to the finish line with your loan. So there's a few things that we'll do for your pre-approval. You'll fill out an application. I'll request a handful of documents. We're going to look at a few key factors: your employment history and income, your debts, your debt to income ratio, your credit score, and your proof of funds. Do you have the money available for the down payment and closing costs? The bank wants to see a 2-year work history. We'll look at your income. The bank would like to see a healthy debt to income ratio. How much of your income are you spending every month on debt? And then your credit score. Credit scores play a big role in the interest rate you're able to get and the cost of the loan. The bank is also interested in your credit history. Have you made all of your payments on time for your car loan, your credit cards, your student loans, whatever you have as far as revolving or installment loans? Are you making those payments on time? If you have late payments, that's a red flag to the bank. And then we'll look at your bank accounts to make sure that you've got the money needed for your down payment and your closing costs. Now, the banks will have certain parameters and guidelines and ratios that we need to hit. So if there are any troubled areas in any of these categories, we'll put a plan together. We'll make sure we fix them. So when you do place your offer, we're 100% confident we're going to get to the finish line and you become a homeowner. Again, my name is David. If you have any questions or you're ready to get pre-approved, or maybe you're further down the road and you'd like to compare loans and rates and costs, I'm here to help.